Yo, what's up, everybody? Good morning, good morning, good morning. Hopefully, you guys have had a good week so far. Had a lot of crazy stuff happening in Iran, right? I think they're still bombing stuff right as we speak. So we'll see how that affects everything. But yeah, if you guys could let me know if you hear everything okay, see everything okay. YouTube's back at it again with these stupid alerts. So I'm not sure. If you could just throw like a 1 in the chat or just confirm that you hear everything, you could see everything okay. And then we'll get started. We have news in 5 minutes, which should be pretty interesting. It's another day where we have split news. So yeah, they've been launching attacks. It's what, 3 a.m. my time? So yeah, if you notice this little piece of price delivery in here, if you recall from the beginning of the week, I said that that could look to be targeted again because it's a little gap in there. It lacks sell side delivery. It's got buy side, no sell side. So from this high, basically to that close, which it went right into pretty much, and they were rejected. We're inside this daily suspension block. So we're just kind of stuck. So we'll have the same perspective we had yesterday, where we're going to let price do what it needs to do, see how this news event unfolds. If it's aggressive, then, we'll see what happens. But if it doesn't really do much, again, we have news at 7 a.m. Pacific Standard Time. Yeah, the Fed chair talked yesterday, and I guess he's talking today too. It's kind of interesting. I don't think I've ever seen them have back-to-back Fed chair announcements. It's definitely interesting. But yeah, again, if you guys could let me know in the chat if you could see everything okay. Just want to make sure before I start going into everything. We'll just throw a 1 in the chat. All right, looks like y'all can hear stuff. So yeah, when we're looking at price, we'll take a look at the bonds and yields real quick. Should be a fairly interesting day. Every day is interesting, to be honest. Audio is echoing. I'm not too sure why that would be. Didn't sound like it when I checked it. Yo, Alvinity, is there an echo? You might have 2 tabs open. Liquidity trading. I just checked it on my phone. Everything sounds good too. I don't really hear an echo. Okay, yeah, so it's coming from your end. If it's not happening for Alvinity. If anyone else has an echo, just let me know. See, this is why I like to ask before I just start jumping into things. Because, you know, tech is tech, right? But yeah, so it looks like everything that we had anticipated for the bonds has worked out. We anticipated that this would go higher, just like this, to go lower. And it's pretty much done exactly that. It didn't go as deep as I thought it could, but then again, it makes sense because they're staying below this gap. If this keeps going lower, that puts downside interest for the currencies, which we could see it's manifesting. It's in consolidation too, so it's, you know, for the currencies, it's kind of a chaotic mess. But nonetheless, we want higher to go lower. So what do you think my first opinion is when I just see something that goes higher that may clearly look to go lower? I'm thinking market maker sell model. I'm thinking power 3, bearish. So we have to identify the level of accumulation. We see manipulation. If we're bearish, manipulations to the upside. It's where the wicks are at. It's above buy side. It's in a bearish PD array. That's what it manipulates to. It doesn't just randomly manipulate. Okay. It manipulates with a purpose, right? That's either to attack liquidity for counterparty or to hit a PD array, to offer price at a premium, to then go lower. It's not just randomly reaching for a high or a low. They're very particular for a particular reason. Say you're like, if you're bearish, you want to see that manipulation go against the bearishness, so it can scoop up orders or go to a bearish PD array. So then you can have a piece of the framework that makes the short make sense, right? Again, for right now, I'm going to still be patient, right? It seems every target we looked at, see that regular trading hours gap I talked about yesterday? Seems that in Asia, we ended up getting up all the way to the upper end. We still have buy side liquidity up here that's available. Pretty much every target that we looked at from price trying to attack the sell side for the gap, along with the buy side levels. Our navigation for the last couple of days using this, you know, every one of the targets have been met. Basically everything we've talked about has manifested in some form or fashion. So we still have the little gap down there. So if it does look to go lower, say the dollar does look to go higher, I'm surprised it didn't take out these lows on the dollar. It's kind of a surprise. It shows that the dollar is being held, like significantly held. So that could be a problem. So we'll keep that in mind. Curious to see what it wants to do with this. You saw that note that I put right here? We noticed that it was staying above. I can remove that. We noticed that it was staying above in that upper 50, upper 25% of the regular trading hours gap. That's a bullish indication. Just like if it stays above a bullish fair value gap, the upper 25 to 50%, or a bullish order block, or a rejection block, or mitigation block, or a breaker, or whatever the PD array is, when it stays in that upper 25 to 50%, and you have a logical target in the form of liquidity or inefficiency, generally it's going to continue to support your idea going higher in that instance, because regular trading hours gaps are PD arrays. It's just in the family of gaps, so it's part of gap theory. So if we were to take this to 15-minute chart, let's take this to a little bit lower time frame. Again, it looks very obvious that they have these equal highs up here. So we kind of filled in that entire gap already. So let me actually, let's get the quadrant levels. Look at how perfect that 8th level in that regular trading hours gap, how that was used for 2022 model short. Right, stop run, shift, fair value gap, delivery, secondary, basically the backup entry for the 2022 model. We also see, those of you in my private group, you also see the razor model in there, and you also see a bearish breaker. Okay. We also had SMT at the highs. So the breaker has the inversion fair value gap you could have entered on. The turtle soup, although, you know, it's not necessarily the greatest thing when it leaves equal highs like this, right? But nonetheless, we have that secondary entry in here when it comes back. So if you miss the first one, you just wait for the second one, okay? Creates an order block, breakdown, returns back into it. You also see that this is a displacement with a wick. We're still in consolidation on the higher time frame. So we got to get away from equilibrium as well. Seems like we have kind of started pushing away, but this has happened multiple times where it goes well beyond and then comes all the way back. Well below, comes all the way back. So we got to be a bit cautious. We have a lot of first presented fair value gaps that price is hanging around. We got 2 in here. Got 1 in there. So let me actually just do this. Just take that whole range mixed with 2 first presented fair value gaps. I'll get my, I guess you could call it a quadrant level there as well. Let me get the normal one. Okay, so all of that stuff is sensitive. I'll just take the whole range. And then you got 1 right here. You have a new day opening gap, new day opening gap, new week opening gaps in here. So there's a lot in that area. 1, 2. So 2 new week opening gaps, a new day opening gap, a new day opening gap, new day opening gap, and then multiple first presented fair value gaps in that area. I like these equal highs up here. Clearly we got equal highs up here. Prices raced up into those using the news event. So that was the objective, clearly. So when we look at this higher time frame, what does this tell you? I see that we have a stop run here. We got relative equal highs up here. We're still at equilibrium. We're fairly close to it still. We got a volume imbalance in here. Actually copy that. Get a little bit bigger. So I guess it already, okay, we have it outlined already. So yeah, we could see that we're above this weekly volume imbalance. That's what this line and this line is. So we're just building a narrative right now, okay? We're building the structures behind, what we could see price do, and it has different little components, and you're just building an understanding or a visual representation of some of these levels in price that should act as, I guess, gripping points, like a rock climber. So if you're assuming that this is going to go higher and target these equal highs, all these different reference points are used as potential gripping points in price, right? Things that when price moves towards that higher time frame objective, whether it's liquidity or inefficiency you're reaching for, or some PD array, like a bearish order block, equal highs, equal lows, in this case, equal highs, a regular trading hours gap, some other kind of gap that's above us, it's inefficient, whatever that is, all the extra stuff that's inside the price swing is used for further reinforcement. Okay, it's like a ladder getting up to, say, this level up here. And the more ladder stepping points or PD arrays the price passes and the respects, showcasing that it wants to get up there, the more stuff you could stack in your favor, the more confident you could be, especially when the higher time frame, as well as intermarket relationships, are agreeing with what it is that you're trying to determine, right? If all that stuff stays intact, you could be confident the price is going to keep going. And then you look at your higher time frame, like the 16-hour, or the 8-hour, or the 4-hour, or the daily chart, and you look for 3 PD arrays that would go against whatever your assumption is. In this case, right, we have a fair value gap in here. We have these down candles. We got a bullish order block here. I think that right there is a change in state of delivery in itself. We've had this one confirm that that's holding in price. So if we get this one, that's another level of a change in state of delivery with consecutive down candles. And it's literally just a bullish order block on the daily chart as well. Right there. Okay, so if it gets above that, that's a daily change in state of delivery. And if that happens, right, and price gets above it, what do you think is going to happen? We're probably going to take these equal highs out. And as we look to reach for that, what on this lower time frame can help us support that idea? Well, you're looking for gaps. You're looking for fair value, for breakers. You're looking for mitigation blocks. You're looking for the upper 25 to 50% of any PD array that it trades above to be respected. This right here is a weekly. It's a weekly volume imbalance, which is a new week opening gap on the lower time frame. You see these purple little shades from this time frame. Right, this one here, this one here. This is the first presented fair value gap idea just being applied to other time frames. So the first presented fair value gap relative to these time frames is also significant. The first presentation fair value gap, it is a fractal idea, just like anything else. So there's a lower time frame first presented, and then relative to the other time frame you're looking at, that's a larger time frame, there's one on those time frames as well, like the 15-minute, right? If you look at the hour that you're working within, if you could see a fair value gap from that open and you get that first presented fair value gap, or if you have a 4-hour perspective, or if you're going through the sessions relative to the time frame you're looking at, there's a first presented fair value gap depending on which time frame you're looking at, which characteristic you're trying to look at, or time interval, I should say. So it is a fractal pattern. Just like anything else, there's levels to everything. Everything goes really, really deep. So you may think you know a lot about one thing, but it's really only a basic understanding. So you want to investigate heavily into everything you're looking at. And everything, again, is going to come back to Power 3 and market maker models. Always. That's like non-negotiable. And, you know, spending time here, you're going to see that. Hopefully by now, a lot of you guys are already seeing that. I see accumulation, manipulation, distribution, looking at target buy side. I can say that if this gets above this level, we'll look at that as a second stage distribution level. And we'll see if we can't target these equal highs up here. That right there has been a pretty reasonable run higher. I'm sure that if we go to this lower time frame, there's something that could have been entered here. That was a market maker buy model. Got accumulation in here. Price gets above it. Comes back down. What does it do? Respects from this low to that high is 50% level. Sell side taken and delivered. Buy side taken and delivered. So what is this? It's a balanced price range. So if it's going to be bullish, we're going to have to stay above these levels. You could now look at this and you could see the market maker buy model for that time frame as well now. Okay, so first stage distribution should unfold. Potential smart money reversal in here. Again, there could have been a buy model in here. There was a sell model in here. There was a buy model in here. As it created this larger one, going lower to go higher. There was a sell model in here. There was a failed buy model in here because it was the sell side of the curve. And then all of that delivered till we got to this level, which was just simply in the middle of that weekly volume imbalance or new week opening gap. And then all the other context we talked about yesterday with the regular trading hours gaps, you know, all that stuff is still significant today. We still have quadrants that we got to look at. I don't know where the hell my DXY went. I'm going to change the template. I'm going to have to add it again. I don't need it on this chart. But yeah, so do you guys have any questions? Just let me know if you guys have any questions. I do believe that we could reasonably expect the price to get up a little bit further. It's pretty wild that there's bombs dropping and the market's still going higher. You know, it's probably, you know, very well could have an effect that's a little bit lagged. Again, everything is controlled. So if everybody thinks it's going to go lower, they're not going to take it lower, right? They'll wait until you least expect it and then violently crash. Again, we do have news events or a news event coming a little bit later. We do have this regular trading hours gap up here. Let me actually copy that over. Oh, we already have it. So again, I'm not really too concerned about being in a rush. I never really am. But it's still CPI week, so it still could have an issue. CPI didn't really give us a heavily deciding factor as far as are we going to get out of this consolidation or not. It gave a flurry of some price delivery, which again we called a bunch of moves yesterday too. That worked out. It's pretty much every trade that we talked about worked out. Some went more than others. But we could see this buy side up here is pretty juicy, if you ask me. Came all the way down to a discount. And now it looks like we're going from discount to premium. And we have a market maker buy model. If you notice, got that as well. This is actually very, very nice. This is a larger market maker buy model. We have accumulation in here, turning distribution. So if we're going to go higher, we have a little buy model in here that may set up the run, but that's inside the larger second stage distribution run. I would really like to see these equal highs get taken out. Those are so obvious. We have had displacement, so it's a pretty nice situation that's unfolding here. So do you guys have any questions? Let me know if you have any questions. But I'm gonna stick to my opinion that we're gonna keep going higher. Honestly, could have taken that trade in there. We're inside the macro now. It's definitely got off to a rapid start. It's pretty interesting. See, that second stage distribution, I'm highly confident that we should be able to get that to manifest. So now we got that wick right here, so we should see that act sensitive. It's just pre-market open. So we got second stage distribution. We got two different levels, two different perspectives. This is for the lower time frame one. This is for the higher time frame one, like that 1 hour, 15 minute. So us getting up into this, we've already kind of worked it, right? So all of this was accumulation in that previous accumulation turn distribution area that we've outlined for the bigger market maker buy model. And our overall target, like I said, is up here. And it's as simple as that, right? Like you notice I'm not saying a million different things. I'm just looking for very particular things that support what my overall objective is. In this case, we have equal highs up there. You know, so I think that's pretty reasonable. And if it doesn't want to get up there, so be it. But I think that we're also inside this higher time frame level, the weekly volume imbalance and new week opening gap. So we're just looking for liquidity, right? Internal to external. Market maker buy model. So now that we're above this, we need to stay in that upper 25% from this low to that high. Are we staying in that upper 25 to 50%? Yep. Right. How about this weekly volume imbalance? Did we stay in that upper 25 to 50%? Yep. So it looks to me like this is pretty trustworthy, at least in pre-market, for us to keep looking for higher prices until proven otherwise. What proves us otherwise? If this ends up breaking through the new week opening gap there, but it may, if it does do that, deliver in terms of high resistance because we have a stop run. If it was a failure swing like this, that leads to low resistance sell-off like it did here. Could you have looked at this and participated? Possibly. But yeah, I think this is going to keep holding and we're going to rapidly keep going. See, that was a really, really reasonable idea right there. So we'll just wait and see. We'll see what else the rest of the session will offer. But yeah, that's nice. Everything that we've assumed up to this point has basically came to fruition. We'll see if we can't get this thing to really, really jack up to the buy side. Again, there's still an uneasy feeling about this equilibrium because we have not confirmed to get out of it yet. We're above it a little bit, but again, you know, it's still there. You guys have seen through now experience the last 3 weeks, right? This week, last week, and the week before, how when we're resting at that equilibrium, which again is from this high extreme to that low extreme, these are the parent price swings. All of this is just building, sentiment inside this high and that low. So, and we're just gravitating back to equilibrium. It's had a very, very difficult time sustaining moves, in part because geopolitics, right? There's wars and a bunch of crazy stuff happening. So that plays a role, automatically makes you lower your risk. And you got to be more demanding. You have to be. Or you cannot, right? You don't have to take that advice, not financial advice, but you don't got to take that advice, right? You could choose to, learn through the fire. But it's highly encouraged that you realize all the things that we talked about this week and last week and the week before about how important identifying the equilibrium is on the higher time frame and what the characteristics are going to be, what can be expected for the condition. Right? We also have somewhat of a sloppy correlation. Okay. We have previous week's high here. These are previous week's highs. You see how close we are to that? When it's like that, many times they do not like to leave that open. If this was the 5-minute chart and prices running up like this, you would think that those equal highs are very obvious. So what makes it different just because you're looking at a higher time frame? There's really nothing. It's your perception, right? So we can also see that this wick ran into this wick here on the 8-hour chart. So there's a bullish power 3, in my opinion, unfolding here. So it's wicking lower. If the next candle opens up and we've already delivered this wick like this, it's a pretty solid scenario to believe that this is going to run higher from the next 8-hour candle in the next 1 hour. Right, so right out the gate, because this previous 8-hour candle has already offered delivery into this, and it's being treated as a BPR. It's being treated with respect in that upper 25 to 50% of that PD array. We also have a daily bullish order block we're trading above. So because this current candle is already delivering into that and pulling away from it, if it closes like this, that's a rejection candle, already delivering sell side. So the next candle, maybe not for the whole 8 hours or the whole 4 hours, but for that next candle, since we've already done work like that on this higher time frame, when it comes out and we open up, it's probably going to be in a mode of, let's get above these buy side liquidity pools. Because we've already worked internal range liquidity here. If we're bullish, external range is the highs. We've already went down to a PD array. We've already fulfilled it. So the next candle, if we open up like that, it's expected with reasonable probability that this should, if everything stays the same, target these highs. And again, we see what's happening, right? We've been correct on that assumption up to this point. So just right out the gate, we assume these equal highs are going to probably be targeted. Right? And there's a reason for that. Hopefully you guys understand why. And again, what's the framework, right? Like, what are we using to structure what it is that we're looking at to make this make sense? Market maker buy model. Market maker buy model. Relative equal highs, liquidity or inefficiency. Okay. Retracement. This high to that low. That's a balanced price range. So it needs to respect that upper 25% from this high to that low. We also have the new week open or the regular trading hours gaps and new week opening gap in here. It needs to respect that if it's going to keep going to the buy side. If it starts to give these levels up, then again, you got to be flexible. And we're, at risk a little bit because of the equilibrium here, not affording this to be allowed to continue to sustain a buy side delivery. But it seems like we may be changing that right now. So if dollar can collapse from this level, I think that would be nice. You see how it's stuck? I hate how it does that. Like I can only be on the 1 hour or daily chart. So yeah, that thing is tanking. So we can go in here and try to look for some type of continuation. That wick was one piece that you could use. All of this, if we're bullish, should be a balanced price range. All of this. Okay. So from this high to that low, as price continues to run up, we should expect that this should not be traded down into. If it does, it needs to stay in the upper 25%. I don't believe it's going to really need to go down there, though. The only issue we have is it's pre-market open. Pre-market open. Okay. Liquidity trade said the markets are fractal. This is a simple statement. ICT traders for the most part understand the concept, but I think there's behavioral and cognitive issues that prevent. Yeah, no, I 100,000% agree with that. That's why I press the issue as hard as I can about psychology and understanding yourself, and why the rules we have for risk management are so important, because it intercepts the human nature issues. Like if you have an issue with gambling, right, or over trading, or you're lacking discipline, if you don't, solidify these things, and you're not fully aware that those are the bigger components versus technicals, if you don't actively, continuously try to improve in those areas of your life, let alone as a trader, this is going to be impossible for you, because it's literally it's coded to take advantage of you. It wants you to keep pushing. It wants you to feel not satisfied. It wants you to keep going and think, oh, well, I lost this one. I'm going to get in and break my rules because I believe I'm correct. Right? That's not submitting to the fact that you could be wrong. And we don't want to be wrong a lot of times as human beings. So your human nature, if you don't have rules around them, around the different issues that come with human nature, you're going to get completely steamrolled. Okay? So that's why I hammer it. So I totally agree that behavioral and just human nature issues that are not fully acknowledged will be the demise, as it is for most traders. So, and again, you have the power to make it so those things don't have power by putting rules in and being disciplined. If you can't put rules in and follow them for at least a week, you got to start somewhere, right? If you overtrade and over leverage, go a week without over trading and over leveraging. If you're trading 500 different models, go a week or a month and just trade one model. Look for one thing in the market. If you can't submit to that because your mind is being allowed to look at 500 things that you haven't mastered yet, and you're trying to engage everything, and you can't limit yourself, all the technicals need to be put on the sideline for a minute. You got to practice being disciplined and following rules, because if you can't, you're not going to succeed. I mean, it's just it's just the facts. You will not win in this market if you cannot control yourself, if you don't have an organized process and an acceptance to the fact that this is the reality. Okay? People like to fight reality all the time. Some use drugs, some do this and some do that, right, to try to fight reality. You can't run away from the truth in the industry, in this industry. And if you try, you're going to be exposed. Okay? And it all, again, comes back to discipline, following rules, and just being controlled, not letting human nature get the best of you. No one talks about this. This doesn't sell a course, right? This doesn't make you jump up and down and want to flip tables, pop bottles everywhere. This doesn't make you super excited, but hey, you're not going to even have the opportunity to go and celebrate if you allow this stuff to plague you. So, and anybody can get lucky, but we don't run off luck here. Okay? It's probabilities, it's proven statistical engagements with concepts that have worked for like 30 plus years with ICT, but in this community, they've worked for 7 years. I've done this for 7 years this year. That's a long freaking time. And honestly, it's taken this whole entire time for me to be who I am. It's a constant management process every day to not let myself fall back into bad habits that I used to have, right? Like over trading, over leveraging, negative self-talk, all these things. It's a constant management process. It never ends. The only way that you're protected by these things manifesting, though, is by setting rules, understanding why you have rules. That's why I explain why certain rules are part of what we do. I don't just say, here, follow this rule just because it's a rule and that's what you should do. I tell you why you need to follow the rules, because I needed that. Why don't you want to overtrade? Why should you not? Well, first of all, you're not going to be able to manage risk properly. Second of all, you're feeding into a gambler mentality. You know, a gambler mentality could turn into an addiction. And if you get addicted to the engagement in the marketplace, which many people fall victim to because they don't have rules or they don't understand the risk and they're not willing to fight themselves to not allow this to be the case. If you submit to those things and you let them continuously manifest, this will become a problem. So it won't be a happy thing anymore. It'll just be a horrible thing for you. Unhealthy, right? Because you could treat this like a casino. Unless you're a professional gambler, that's not going to be profitable for you. There are professional gamblers, like those that play poker and whatnot. But they're based on probabilities, right? They're running off probabilities. And when they're in their favor, they know when to put the foot to the pedal, right? And push it. But they also know the probability when things are not in their favor. And so they pull back. You know, I give you those scenarios as well. Talk about CPI, NFP, all these news events, Fed speeches, day before, day of, day after a holiday, Mondays, a lot of times on Fridays as well. In consolidation, close to equilibrium. These are all moments that you got to lower your risk, because it's like you're at the poker table and you're getting shitty hands given to you every day. It's like, okay, well, I'm gonna have to fold on this one too. Fold on this one too. I'm gonna wait like a sniper in a tree on the top of a building, right? Or a poker player waiting for those powerful hands relative to, you know, the cards in the deck. There's probabilities with every hand you're dealt. There's probabilities with every market condition you engage. They're either going to be higher or lower. And again, to not fall victim to the normal things that everybody falls victim to, human nature, okay? Being overly ambitious, like uncontrolled ambition, right? These things could really damage you. So there's two sides to the coin for everything. But again, you have to understand why you're following certain rules, what you need to watch out for. Because this is a game of probabilities, just like poker is. And you got to know when to pull back. And again, people don't like to hear this, but there's other channels for you to go get smoke blown up your ass while you continue to fail. You know, those that can't hear this stuff and sit with it and accept it and really start to internalize these things, they're not going to succeed. And that's just the facts. I've worked with many, many students. Those that choose to not listen, those that choose to not take good advice. The statistics are what they are for a reason. You know, I was in that negative statistic. And again, like I said, it's a constant management process. I'm not exempt. If I break the rules, if I don't do what I know I need to do, you know, I could blow everything and have to start over just like anyone else. No one's exempt. You know, even though some people on the internet may seem like, you know, they can't ever miss. Oh, they're missing for sure. They're just not telling you. They're not being honest because they think it doesn't look good for their image. I could care less about an image. I just want to help you succeed. Or at least get to a point where you can walk on your own so then you can take yourself the rest of the way. And that doesn't come from me blowing smoke up your ass. There's enough stuff on the internet for you to waste your time on. I'm not trying to have this community be one of those, you know? So Sometimes it's going to be uncomfortable, some of the things you hear us talk about, but you know, it's also uncomfortable to blow your account and have your dreams just melt away in front of you because you just will not change things. You will not accept the truths in this market and make the changes that are required. It's going to be painful either way. You know, growth is painful. But you can get better as you grow, as you do things that are positive for you. The worst thing you could do is not do any of this stuff that you know is deep internally. You know this stuff is good advice. You know for a fact. But the worst thing that can happen is you know the right things to do, you choose not to do them, then 10 years passes and you regret it, thinking that, oh man, I just shoulda, coulda, woulda when I was first told these good things. Because those that refuse to change, you're headed for that. Or you're going to quit, right? Or you'll get just physically, financially removed from the market because you can only lose so much. No one has unlimited money. Once you know what you're doing in trading, it can feel like you have a permanent ATM machine. Not every day, but you can manifest a lot in this market once you know what you're doing and you know how to manage the downside. Anyone can have an upside run. Anyone could catch some luck and have a bunch of winning days. But just like with the lottery, if you don't know how to manage it, you don't know how to manage risk, you don't know how to responsibly do things in the proper manner, you'll go out and blow it all. You can make $1 million today. Most likely, if you don't have the proper mindset, you're going to lose it all. You're going to give it all back to people that do have the right mindset, right? They say that if everybody in the world was given the same amount of money, money would still end up in the same hands that it's already in. Because there's financially literate people that respect risk, and there's people that are illiterate who don't respect risk, who want things, materialism, who don't invest, who don't have the proper money mindset. So the money switches from their hands to the hands that understand, that know how money works, how it needs to be employed or deployed, and how you need to behave with money, right? So trading is much bigger than just candlestick charts. It's the most intense personal development journey you'll ever go on. And those that fight that reality, that aspect of this, you're going to wake up one day and wish you did the right things, because you know what the right things are. I know every one of you who's maybe making mistakes with over trading and over leveraging. I know, and everyone else knows that because it's said a lot, all the good things, but it's not flashy. It's not fun to think about these things because it seems like it's going to be slow. It seems like you're stopping the opportunity, when in reality, the exact things that you refuse to listen to are the exact things that are, the way to manifest all this stuff, right? The proper path is in front of you. You just have to take more steps in that direction than in the direction of reckless gamblers, So it's the way it is. And again, people don't like to hear it. So be it. I'm not here to tell you what you want to hear. I'm here to tell you information that you need to hear. Because I needed this. I literally paid thousands of dollars just for someone to tell me these things. Literally. Like, desperately looking for someone to do what I do and be willing to help me and hold my hand if necessary, whether it required an investment or not. I needed that personally. So that's part of the reason why I'm here live as well on YouTube. That's why I have a private group. Because I know with the right mindset, anyone can succeed in this. With the right perspective on trading, the right acceptance to reality, and then the right rules put in place, plus effort, right? Being consistent with your studies, studying the right things, with all that stuff and the proper mindset, constant work on your mindset as well, anybody on this planet can make this something that they couldn't even imagine, that they still can't even imagine at this, even seeing what's possible. You still can't imagine. We're in an unlimited market. Like this, you can make unlimited amounts. Doesn't mean you swing for the fences. You still got to have a plan and do it properly. You know, there's a way to do it properly that you can, really see good results from. Liquidity train said, the truth could be staring you in the face and you will choose desire over the fact. Yeah, that's human nature. It's definitely human nature. We're all flawed. So like I said, it's a constant management process, but you got to understand the management tactics. How do you manage yourself? We're all different. Some people deal with over trading. Some people deal with over leveraging. Some people deal with both. Some deal with negative self-talk, right? Some people have more stuff going on in their lives. Some people don't have enough time. Some people have more stress. So there's different solutions for everybody to fix certain problems. But, something where everybody can meet in the middle on, right? The acceptance that everybody has these issues that have to be managed, and you have to learn how to manage them. All of us have to face that. So, I'm sure we all can agree with that. But the question is, are you willing to get uncomfortable and identify and acknowledge some of these things? Because that's the first stage, really analyzing how you operate. How do you feel when there's an expansion aggressively moving? Are you panicking? You think you miss everything? If you miss a move, what are you feeling? All that stuff can be traced back to things in your personal life as well. Things that manifest in the chart. It's like a mirror. If you're undisciplined, if you lack some of the skills that are required, being organized, having self-control, self-confidence, you know what I mean? If you're lacking in these areas, you're going to see it in the chart. It's going to manifest through either over trading, over leveraging, forcing things, chasing price, getting out of trades too early, hesitating. Part of it obviously has to do with experience and whether you know and have enough time put in and have studied enough. But a big part of it, it's going to be things that are very uniquely personal to you, to me, to everyone else. So it's a real journey to do this stuff, but it's attainable. You just have to know the proper things, have the proper mindset, and then actively work to be excellent, both as a person and then as a trader. It'll pretty much automatically manifest. You got to live your life consistently. You can't be a crazy animal outside of the charts who's reckless, wastes his money, just has no respect for the future, right? When it comes to your finances or your health, and then think you can come into the market and then be a effective operator. It just doesn't work like that. You can't live two lives because it's going to manifest. It'll pull it out of you. This is a highly emotion-driven environment. It's based on probabilities. So just some truths, some reality most people don't talk about. Because again, everybody wants signals. Give me a signal. Give me a signal. If I give you 10 signals this week and they hit, which we're kind of close to that already. Say you took all those trades and then I was not to show up next week. Did it really do something for you? Because you're just going to give it all back anyway. Especially if you can't stop over trading and over leveraging, you're not taking good advice. This is why signals are stupid. Anyone that tries to live in that world, I need signals. Unless you have that as your goal and you still understand risk, you're not going to overtrade, and you still have some of the good trader tendencies, Unless you have those things, no matter what you do, it's just not going to work, especially signals. And you're putting your faith in someone else to build your future for you. And if they're good and, they have taken on that role, so be it. Massive respect to those people. And they are there. They are out there. You just have to find them. And many times they're not $20 a month. Okay. Like if they know what they have, they're not just going to, they're a lot more pricey. I saw one guy who's verifiably profitable, who has this role, charges $499 a month. But the signals hit, So, there's a place for everyone. But I personally think it's best, even if you don't have a lot of time and all you can do is swing trade. What I do and what I teach you literally works as a swing trade. Do you see how many times the higher time frame goes to where I say it's going to go? Every week. Okay. Give or take a handful throughout the year. If you find your model on the 1 hour chart, just so you can have a little bit smaller risk, or 15 minute if you can go lower, enter it, have a reasonably sized stop loss relative to the target and the higher time frame structure and framework, and you hold it for like a week or two, there's opportunity there. Okay. You don't need to day trade to succeed. So no matter what lifestyle you have, you can make this work for you. I'm not sure if swing trading is very favored when it comes to prop firms. I don't think they really allow it, but maybe like daily trades, like from the start of the session to the end of the session, and then you close by the end, or when your goals are met, without ever even going to the 1 minute chart. You could thrive just off 5 and 15 minutes. You're not going to have as many opportunities. You're still going to have a good amount, but they take a little bit more time. And we're literally structuring everything off of those perspectives anyway. Like literally what I'm teaching you has to do with us identifying higher time frame levels that support our lower time frame objectives. And we just look to get in with the trend, right? With the move towards large objectives, right? And until it gets to those objectives, we keep pushing it in that direction, unless I'm talking about counter trend trading, which I teach that too. And it's universal. Everything I talk about is universal. So you got to know what's reasonable for you. You got to be managing yourself. You got to accept these realities. Advice seldom given. Yeah, I agree. No, really, no one's talking about this stuff. It doesn't hold an audience. That's why you need to be jumping up and down, sending signals every 5 minutes. And that's unfortunate that the marketing in this industry has made people gravitate to that type of stuff. Because just, everyone that has this gambler mentality, because that's what they're being fed, because it's exciting, right? All of them tend to fail. Nobody starts trading with the intention to fail. So it's like they're like sheep being led to the slaughterhouse. And the people that are hyping this stuff up, they're the butchers. They know people are going to be reckless, but they also know they need to get their next fix, like a drug addict. So they're weaponizing. Even human beings who run a lot of these services are weaponizing your human psychology against you. So you're faced with them plus the markets looking to annihilate you. And people gladly subscribe to it and still think they could be successful with that mindset. It's just not the reality. And then someone like me comes along, right? Or ICT comes along. And because people are so indoctrinated into this perspective about trading, they can't even pay attention for a couple hours, let alone 15 minutes, right? Like It's wild. You know, I'm grateful I snapped out of that perspective because I was there too. But I decided early on it was either this or nothing. And I knew that if I'm going to have that perspective, depending on someone else, that's not going to allow me to be comfortable. And I was already uncomfortable in my situation. So I said, oh, what's a little bit more uncomfortable experiences with the outcome that is unlimited? And the rest was history. Said take up chess or poker and try to get good before risking money in trading. I mean, that could be somewhat beneficial potentially. Poker, absolutely. Because you're literally put inside the mindset of a person that thinks in probabilities. Every hand, every pair of cards that you get has a probability of winning. You have to understand that stuff. That's how you become professional. You got to know when to push your chips, when to fold, right? When to wait, when to let it pass. Just like how we got to do here. When the trade setup unfolds, what are the odds stacked with us? I help you build that stuff from the higher time frame, from Sunday. I give you the narrative. I talk about all the different levels, right? Like when price trades through a PD array, how it needs to react if it's going to continue to build probabilities that we're correct. Right? All that stuff is the same as someone that plays poker professionally. There's some traders that are active professional poker players who also day trade. I saw this one guy who's running like a ton of ads on YouTube, couldn't escape, just like nonstop hammering because I couldn't skip his freaking ad fast enough. They thought I was sitting there watching it, but he's a professional poker player. And it's pretty interesting. And he's a really good trader. So lots of commonalities. So yeah, nothing for me has changed, right? If we come back to the chart and because we're coming closer to the open. So again, hopefully you guys got value from what I just talked about. A lot of people are not going to get value from it. And, it is what it is. If you want me to be like everyone else, I'm not going to be. So, there's a very small minority of people that have the right mindset in trading. And ironically, they're the ones that don't get the most attention unless they're crazy, right? Doing a bunch of antics, causing chaos, right? And then there's people that are shitty, provably shitty, but they look good on social media and everybody runs to them, especially younger people. That is a tragedy. ICT has his antics, but he at least has quality when you spend time with it. Versus 99% of the trading industry. A lot of times the loudest voices are the worst possible traders. At least most. There's a lot of loud people that are actually pretty good. But they're a minority. But yeah, hopefully all that stuff is valuable. Hopefully you guys could take some away from what we just talked about. But nothing has changed with my opinion at this point. I do want to see how dollar is going to be treating the level it's currently at. I like this retracement on the Nasdaq. That's a pretty nice situation. If we can get price to hold this level. Now, if this breaks down and we invert this fair value gap, I'll really have no problem trying to see it go even lower. I think it's more advantageous for them to get up into here. What do you think everybody's thinking at this high up here? If you're normal retail logic, right? Oh, that's strong resistance. I do see that it's respecting this order block, so that's a good sign for the order block. But if dollar continues to drop, then we should just simply, again, see this as a wick, which we have 30 minutes until this 8-hour candle closes and a new one opens up. So we immediately came back down and rebalanced this whole entire range of this previous candle. We're now tapping into this wick here. Okay. We have a large wick in here supporting the bullish order block. What happened on the next candle? Well, if we're bullish, it needs to respect the upper 50, upper 25%. And did it do that? Yeah. So I'm expecting, because we have equal highs up here that are very obvious, we're pretty far away from the lows down here. Unless, of course, it chooses equilibrium again, which could be the case. It's a risk. It makes today a little bit more risky. It's made the last 2 weeks risky for any type of sustained follow through. Has there been reasonable movement to be able to participate in? Sure. We've called many trade setups just in the last 2 weeks. But that is a risk. So if it fails, right, it starts to break down and gets below this fair value gap, or gets below the midpoint of this high to that low, so the midpoint here, and below the new week opening gap, again, we may look to try to come down and even take some of this out, because this is definitely a failure swing as well. But that's inside of a balanced price range, right? High, low, higher, high. Okay, so we got sell side, buy side. If we look to collapse aggressively, though, we do still have this lower level that may look to be targeted. That's a little too far for me, though. We're already all the way up here. If we were to break down and we get below this level in here, the midpoint of that wick, which is below this low, again, that would put us in position to maybe consider some of this. But for now, I'm not going to consider that. I'm going to consider the likelihood of this continuing to go higher for the market maker buy model until proven otherwise. Look, like I said, this should be treated as a balanced price range if it's going to go up. Things may change if we can't stay above this fair value gap in here, though. So now we're getting into 6:30. So now let's see what this first 30 minutes wants to offer us. So we'll be on the lookout for our first presented fair value gap. So I'd like to see if there's going to continue to be an argument for, oh yeah, S&P's rallying. Oof. Pretty nasty Dow price delivery, right? Again, very, very highly risky environment to look for ideas in. So anything that I take a trade on is going to be at half risk. This wick, we're kind of in the middle of the quadrant right there. Let's see what it wants to do. Took out buy side, we came immediately back down. So yeah, again, we got levels that need a hold in here if we're going to justify continued buy side delivery. Just got to run up above this. Remember, there's characteristics in the market maker model that have to hold for us to continue to believe it's going to get up here. The Iran war causes uncertainty. We may send the dollar higher because they're doing a lot of quantitative easing. Rate hikes as well could look to send the dollar higher because the yields will go up. If the yields go up, the currencies and other assets go lower and the dollar goes higher. If that happens, right, say we break down below this level again, start reaching into that wick, the longer term objective would be down here. So it looks like we're having a refusal to get up into here. So again, I'm sitting on my hands. Just feel this out. We have a big regular trading hours gap. So we got 50% of the regular trading hours gap in here. It's pretty strong probability almost every day of the first target being the midpoint of that. We've talked about this week. ICT's talked about it as well. Very first thing you're observing is the likelihood price has from the open price of getting down to the midpoint. In this case, we have a lower discount gap. If we want it to go higher, price dropping down into that, tagging it, but closing above the upper 50% while it continues to rage higher, just like it did the other day with this gap, right? It had a huge gap that formed, but it stayed above the midpoint. Because it continued to do that, and we got displacement continuing to the buy side, dollar was weak. Because it left that lower level, it continued to go higher. Because again, that's a PD array. Closing above the upper 50% promotes bullishness. Now, if it breaks through it and starts to get below, maybe it comes back, uses it as resistance, and then drops. You can continue to see that it's going to be bearish. But something like this, if we break above this high, it's pretty unlikely that they're going to target the lower level. So yeah, this looks like it may form a bullish breaker. You see that new week opening gap being respected? So we have lots of different levels in here that we're observing. We have clear targets up here if it was to keep going higher, which I would prefer to see it do. The high, low, higher, high. So yeah, watch this wick. If it respects that and then changes state down below this, again, we may gravitate to the midpoint right here. It looks like that's going to be the case potentially. It's a little chaotic. Ugh, look at the Dow. Oh my goodness. Yeah, I'm not touching something that looks like this. It's just the way it is. Ask yourself, if you engage something like this, are you comfortable? Is there enough on the back end supporting your idea for you to be like, yeah, I'm certain it's going to reach this or that? I'd make an argument that there's not enough. It's all over the place. Curious to see what this next 8-hour candle is going to do, where this one's going to close. If it stays above this wick, upper 25, upper 50%, preferably that upper 25%, we may see price try to get up into this level up here. Take a look at that right there. And yeah, if this ends up below this low, we may classify this as a market maker sell model. And we'd have to study how this is treated. And if it respects that, once we get down below this wick, that will qualify second stage distribution more long term. Freaking eyes are not doing too well this morning. So yeah, let's see what happens here. As long as it holds this order block, it may look to keep going lower. I'm going to wait for a macro. I don't like the massive crack and correlation here. It's very high risk. At any moment, this can snap back. The other two are going in one direction. The Nasdaq's having a hard time. Unless you wanted to be ballsy and engage something like this, targeting the lows here, which again, this is high resistance level. It's a high resistance level. So watch this fair value gap here. So now that we're below that, watch how it respects the lower 50, preferably lower 25. See how that offers potential short. I'm not going to take that. So we've hit the midpoint of the regular trading hours gap. So Nasdaq's choosing to walk on its own, right? Kind of do whatever it wants to do against the others. So all the more reason to wait it out. We do have a bearish breaker here potentially if we can close below this. It's also an inversion fair value gap right there. So yeah, this might be a real catalyst for us to really accelerate. So pretty nasty rejection. There's SMT at the highs. So I don't like that the Nasdaq's dropping and the dollar's declining. I don't like it. I don't trust it. So I'm not going to choose to engage this. Relative equal lows. If this is going to go short, it's going to do it right here, right now, close to a macro, and it's going to accelerate. And we're never going to reach back above this level up here. This, in my opinion, given all the different things that are going on, how it's cracked in correlation, it's doing whatever it wants. It's high risk. Could it work out? Sure. It looks like on this chart, it's going to get us down into that. So you'd have to make a determination. Is this part of your model? Does this fit, or do you just think it's going to go lower? So you're just going to get in just because. Again, you have rules or you don't. And when things don't align in the way that you want them to, and there's not enough supporting a particular idea, you got to determine, are you willing to be more aggressive and bend the rules? I would go out on a limb and say, if you haven't followed the rules and became consistent doing that, bending the rules just because you want to get in, long term, it's not going to be beneficial. Clearly, we've been correct, though, about that. So I'm very curious to see what they're going to do once they get below this low here. It's pretty wild how these other ones are kind of just, they're all just kind of doing whatever they want to do. Maybe Nasdaq will end up showing that it was the leader. Maybe they all start to fall a little bit later. But we got the dollar falling as well. So again, this isn't something I'm willing to participate in. Was there a move? Of course. Right? Did we call it out? Sure. Is there enough on the back end supporting this decline for me? No. So rules are rules. Could you have engaged this? Obviously. Did we see it before it happened? Did we not talk about how when it breaks this low here, it'll probably target the lows? Yeah. We framed that out already. The question is this in your model? Is this something that's reasonable for your model? Let's ask this question. Why did this hold? Well, we have displacement. So fair value gap overlapped with a fair value gap. What does that create? A balanced price range. So if that's the case, midpoint should be respected. So that's what anchors this to go ahead and target that. Now we got buy side, sell side delivery. So what should happen? If it's going to be bearish, we should continue to see this low to that high, respect this lower 25, definitely the lower 50%. If it gets up to that 50%, that's a problem for shorts. So we would demand that the lower 25% stays respected. We have a wick with displacement right there. Okay, wick, displacement. We have the low of the regular trading hours gap down here that may get fulfilled. Looks like they're in a hurry to get down there. We didn't really have much of a resistance to this midpoint. Right? That's a line in the sand for us to respect the fact that buys would still be favorable. Is if it would have got back above this gap here or inverted this one after we tapped the midpoint, because that would show that we're staying above the 50% of the regular trading hours gap. And that still allows for these levels up here to be considered. Again, this is a level where there's equal highs, but they're formed at a bearish order block that's rejected price. So if things like this continue, then that order block is pretty savage, right? It's been holding. Yeah, no, inside this is definitely something to consider as a short. But again, the question is, does it follow your rules? So these equal highs up here with the dollar going lower. I'm curious to see how we're going to respect that. We'll see how deep we go. Again, if this respects that lower 25%, it's going to reach lower into this. So let's let this macro mature a little bit, because we do technically have seek and destroy that's unfolded here. And we got massive cracks and correlation across the board, unless this is what it decides to do and it breaks aggressively, because then we'll be in correlation. But for now, it's cracked in correlation. Dollar's going lower. That promotes this to go higher. Right? We got the bond markets now going higher and the yields dragging lower. So that drags dollar lower, indices higher, currencies higher. We got cracks in correlation behind these as well. You see that there's a massive decoupling across the board with many, many assets. Again, as long as it stays below this here, price will continue to go lower. I would prefer in this instance to see that respected, get us to break down through that and then use that as an order block, this wick with displacement as a balanced price range, and then just assume that all of this is going to be treated as a BPR. And simply look to target the end of the regular trading hours gap. Again, there's just too much conflict behind many things for me to want to put real money behind. We may be right. I'm more confident that this is going to drop at this moment than I am for it to go higher, given what we've seen. So yeah, what my attention would be on is this. Watch this. It needs to be very aggressive from this level. And that's what we're getting. It didn't necessarily, did it? Yeah, it barely tapped that lower portion. So that's a really good sign for it to keep going lower. Again, the only way I would be looking to buy again is if we were to get back above this level. It denied the ability for it to rally by smashing through the low of this fair value gap, which again, we highlighted, we talked about. That confirmed that it was probably going to reach to the lows here, which again, we've been walking through. Didn't really reject from the midpoint. We just broke through that. So we should spend very little time inside this. So now we're in the macro. So if you're disciplined and you only follow the macros, we'll see if something can be offered around this time. I would not be surprised, given what we see here, to see price tag the rest of this regular trading hours gap. Yeah, Jen, this box up here, this is all the overall outline of a new week opening gap. So we've been working the lower portion of it. So we have that outline too. Do we have another new week opening gap? No. So it looks like it's going to completely fill that in. So now this regular trading hours gap is going to be inefficient to the buy side because we've got sell side delivery. Let's go take a look at some of these other ones again. Order blocks still being respected. Still got a nasty crack in correlation with the currencies. So yeah, now it looks like everything's falling in line. So yeah, again, like I said, if this gets traded below, that's a previous accumulation held as a BPR bullish, now turning to inversion. We do have this high to that low. That's a stretched bullish breaker. So that's a level of concern. But if we could respect this as it goes lower, right? Say it breaks through, comes back, respects it, and then displaces lower, that'll verify this as a second stage if we can get down there. And we have very, very clean liquidity down there as well. Again, these equal highs being so obvious, right? It's hard not to attempt to target those, especially because we were in a second stage market maker buy model. But, back to what? Equilibrium, like I said, could be a risk. So it's not a surprise that they came back. Once they tag this, right, it was off to the races from that. But now we're right back to equilibrium. Like I said, would be a risk if you were looking to consider buys, which we started the day looking to see if we could validate. Once it did this, it turned it off. And like I said, the only way we'll look to buy again is if we can get back above through these levels. And there's too much crack and correlation. It's just too all over the place. For me personally, that doesn't mean you have to follow that. But for me personally, this is how I see things. This is how I trade. And I think we do pretty well. So again, this condition is low probability. I'm not in any way super ecstatic. I'm not concerned that this was a move that I didn't participate in. If you participated in this and used some of the stuff that I outlined, that pretty much confirmed that this was going to go lower. Talked about this wick, talked about the lower 25%, talked about when it tags that, it should keep going lower. Talked about if you miss all of that, you could have engaged something like this. We offered that real time. I said it should go lower. And then targeting simply the regular trading hours gap low. So all of that, it's reasonable. But again, things on the back end, because my rules are what they are, keeps me out of a situation like this. Because a lot of times when there's such a crazy crack and correlation, until things get back in line, at any moment they could flip the switch and you could be wrong. And we're trading with real money. You know what I mean? So we're not trying to get into things that are a little more risky than they really need to be. At least that's my perspective, of course. But it was a pretty damn nice short. And again, once we tag that lower portion of that fair value gap, that was the green light, like we talked about. And then once it tags that, it's off to the races again. So whether you targeted here with the balanced price range, inverted fair value gap, or you targeted right there with the bearish order block, balanced price range, also bearish breaker, low, high, lower, low. So a lot of things aligned in this area for price to go lower. So if you saw a short in here, whether you took it or didn't take it, but if this makes sense, it's definitely something to highlight. But you also got to consider the fact that on the back end, there's a lot of crack and correlation. We're back to equilibrium. Dollar's declining while the Nasdaq's declining. So correlation's not in alignment. So you have to decide within your rules, are you willing to still engage when things are not correlated? Because it lowers the probability. It makes it more risky. Are you willing to assume that risk? And if you are, there's nothing wrong with that. But you have to know those things. And me personally, I'm not an overly aggressive trader. And I'm willing to let these types of things go when things don't align, at least as close to A+, given my rules, as possible. Okay, again, we find trade setups every day. So missing a move. It's all right. That's a pretty spectacular run, though. It just it went right to equilibrium. Now we're blowing past it a little bit. See, so the Iran war, I'm pretty sure, is what's having such a heavy influence. Currently, right now, as we speak, bombs are blowing up in Iran. Since 3 a.m., they've been blowing things up. Emmanuel, yeah, that was a market maker sell model. So you see how it broke down below this, respected that. It was trading into a balanced price range here. Looks like this was accumulation, manipulation above the highs to distribution. Again, all of this was working inside the possible market maker buy model, aiming for these very obvious equal highs. So they may have also denied this because everyone sees those highs. So that's a factor that plays a role as well. Did we come all the way back to this? We're about to come back to the first presented fair value gap of the previous day. So let's see what else we can get into here. That's a huge breakdown. So we have change in state there. Now we got a second change in state. So if we could get below this, right? If we can close below that and then see a return back into it, we may be able to catch another market maker sell model. It just depends on how fast they're trying to push this. Again, we still have a news event coming at 7 a.m. So all of this is happening pre-news. On top of that, that's another thing that keeps me from being aggressive in this circumstance. Cracks in correlation, a red folder news event coming, one already unfolded, bombs blowing up everywhere. So it's not a time that you want to be overly aggressive. I'd rather be cautious and follow my rules than aggressive to try to just come out here and take, anything that seems like it may do this or may do that. But again, you saw the adjustment thinking, right? I could have engaged this, right? I pointed it out in time for you guys to also consider, this isn't financial advice. I don't encourage you to take anything, but we framed it as it was unfolding. So technically that's a signal. But me personally, because I have rules, I'm not afforded this ability to enter this, given the different back end things. And if I did engage it, I'd have to accept being aggressive. Being aggressive when you know that bombs are dropping, we know that there's a Fed speech is coming that's probably going to do yet another shakeup, because these are big conversations that they're having. They're not little economic, statements. Like, these are huge statements about interest rates, the economy right now, inflation, all kinds of different things. And there's a lot of manipulation because of that. I would say that this high to that low, the only way I'd look to buy, right, is if price can get up through this level, retrace into it, act as support, and then set up one of my models that I'd like to see around that level. Because again, we have sell side offered in the regular trading hours. Now it's inefficient to the buy side. So again, this is the first 30 minutes that's unfolded. So we'll see. Are they going to give us that follow through? Right? Are they going to look to follow through on this and keep going lower? Do got that lower 25%. If we retrace and then we can't get to the midpoint again, and we continue to drop and say it reaches down below this one more time, we're now respecting the lower 25% of the regular trading hours. So that's a cause for price to continue to try and seek sell side. Again, we're inside of a bullish breaker here now. We also have a bearish breaker here. So if it gets below, that's a bearish breaker. It's also accumulation, turn potential distribution if it's bearish for a sell model. And then again, we're inside this bullish breaker. So it'd be a little bit more convincing that longer term, they're looking to take out, say, something down here. If they were to close below this candle, basically invalidating that bullish breaker. This could easily just be a retracement to send us back above these equal highs up here. Right? And again, we're back to equilibrium. So they really could just bounce around sideways. Does that mean intraday volatility can't be engaged? No. It depends on what your goal is, though. Are you looking for, small scalps? Right? You're looking to just target from here to there, maybe from this retracement to here, right? If that's the case, you could consider, looking for your model in there. But if you're trying to be part of the larger price swing, there's an argument for this, because that was a pretty reasonable run. Again, we pointed that out. But I'd like to see something like this, right? We're inside of a larger time frame PD array. That's a 4-hour bullish breaker with relative equal highs. 3 PD arrays have not been violated here for us to turn off the sentiment for price to want to go higher still. We are at equilibrium, so that's a risk of it being held. But it still has enough life to be able to get us up above these equal highs if we were to displace, I would say, getting up above this fair value gap in here. So basically blasting through these levels. Once we get up into here, we would then look to buy. Other than that, right, if it doesn't get up there, we may continue to short. So shorts are more favorable at the moment. So yeah, these are some of my thoughts. This is what I see in price. Nothing in here has me overwhelmingly excited. The one thing that could have been engaged was this, like I said. But then again, you either have rules or you don't. right? Having rules, you're going to miss moves. You're not going to catch every swing. And if you want to catch every swing, you're going to overtrade and you're going to be met with more losses than you should. And are you really trading your model if you're trading anything and everything? Are you really following a process if most of the back end part of the process is having an argument with current price, right? And then you're just engaging whatever, right? Are you really following a process? Are you really being disciplined? Or is greed and FOMO taking hand, like taking your hand and dragging you around? By this time, those of you that have been with me for a while, missing a move should feel irrational to be upset about. Because again, we missed this one. Does that mean nothing else is going to show up? No, I'm pretty sure in the next hour, hour and a half, we'll find another setup. Right? This is basically 3 setups inside this. Talked about the return into that fair value gap. That was 1. Broke down. We had this wick, right? Returning back into that. That's 2. Price breaking down, sending this wick into the lower portion of this. That's 3. So just in that area, there's 1, 2, 3 opportunities that could have been engaged relative to what we talked about, right? We pointed this all out in the moment, right? And once it tagged this, we did initially want to see if we could get an opportunity to target these buy-side liquidity pools. Because I mean, that's just too obvious for you not to take your eyes off, of, right? You know, this fair value gap being inverted is definitely something that builds an argument. The price still may look to go lower. So the low part of that right there, I would say, needs to be outlined. So yeah, this has now been qualified as a inversion. So we're going to have to see how that's going to be respected. We're racing all the way back. You see what would have happened if you went in there chasing a short? You'd be sweating bullets or stopped out by now. If you didn't expect 20 to 30 points from this move, equilibrium is doing what equilibrium does. It's showing you the risk that, again, I'm not willing to partake in when things are not aligned in a condition like this. It's showing you the risk. We're getting deep retracements now, right? No follow through equilibrium. So again, you got to make the argument to yourself, you know, about certain conditions when certain things unfold. Are you willing to take those trades? Maybe you are, right? But I'm not, right? You know, I like to stay within my rules, and you should too. But if this is part of your rules, right? Again, you don't have to follow every rule I have. I've cultivated my process just like you have to cultivate yours. And we're all going to have a different perspective when it comes to missing a move. I'm totally fine if something does not align with at least majority of the things I want to see price do, from both the back end analysis to the front end when I'm looking for executions. If majority of that stuff does not agree with an idea, I'm not going to participate. And I may be correct in a trade setup, but I know better than to break my rules. And it depends on what rules you have as well, you know? Because if taking something like this fits all your criteria, you know, who am I to tell you any different? I'm just sharing my opinion, right? But if you have rules around certain things in your analysis that have to be aligned in order for you to take a trade setup, and you break those rules, I'm telling you, it's going to come back to bite you in the ass like a snake you just sat on. And that's not fun. I don't want to be bitten in the ass by a rattlesnake. See, again, what I would be looking for in here, if I was considering that, okay, well, we went from sell model, reach down into the bullish breaker like I talked about, to then potentially seeking a buy model in here, right? The way I will gauge that is once we get above this accumulation, because this could be a buy model. Remember, this is at a daily bullish order block or daily bearish or a bullish breaker. Sorry. So that's a daily bullish breaker right there, or a 4 hour. See that 4 hour breaker, that's a higher time frame PD array that we like. If we're trying to catch a buy model, you notice where the smart money reversal is here for the sell model. It's at the low of a new week opening gap. Okay. And that triggered in the rejection. And then we have the accumulation here, turn distribution. And then we had second stage here, dropped, right? So now we have the sell side of the curve if we're going to be bullish. If it does look to come back and take these highs out, which we're going to have to break through this inversion here. Because if we can't, and it just taps that, and we aggressively start to reprice lower, we're going to continue, right? So getting up above this, treating that as support is an early sign. And then if we can displace, get ourselves up into here, right? Or just simply above this candle, we could use that as second stage. This as an inversion fair value gap to support that idea. So anything up in this area, if we were to displace through that, may be enough to justify, if your model is present, a run up above these highs. So it's very risky right now, right? We're inside of 2 PD arrays, 4 hour inversion, along with a bullish breaker right here that's had a pretty solid response. It's also a bullish order block that hasn't fully been disrespected or closed below the midpoint. So again, it's a risky environment, and we're at equilibrium on the higher time frame. So a level of certainty that's relatively easy to find on a daily basis, which you see here on this channel all the time, it's not necessarily present. That high level of certainty that we many times have, because our analysis is showing us green lights across the board. It's not showing green lights in a fluorescent manner right now. We need certain things to unfold to turn those green lights back on, right? If we're looking for bullishness, we need to get above this, and then eventually above the midpoint, show no respect to it, and then above this inversion, turning it to a reclaimed bullish fair value gap. I would be pretty certain that these highs are going to be targeted, and the rejection block up here as well. Once that happens. If that doesn't happen, in order for me to short, right, we're going to need to see this thing start to dynamically reprice lower. Let's invert these fair value gaps. Let's get below this regular trading hours gap, so that when it comes back up into it, we're also respecting that lower 50% of the regular trading hours gap. So that stuff makes it more certain that price is now going to continue to maybe even seek some of this. But again, we have high resistance levels down here. That's a bullish PD array. If we're going short and we're trading into bullish PD arrays, you run the risk of this happening to you as you chase the short. Okay. So that's why I'm not in here chasing this lower, because I've seen it run. Many people probably are, and they're probably punching the air right now, wishing they listened, right? And at least considered some of the thinking that we've talked about today. Okay, so now we're above this. So again, our first sign that we may continue to see trustworthy bullishness is going to be in here. Okay, so it's going to have to remain above this. Where the hell is... Okay, dollar's going lower. That's a beautiful sign for this to continue. S&P is going higher. We have a change in state of delivery there. So we got quadrants on this wick. We got relative equal highs here. So yeah, I'm pretty confident that we may be able to see this turn around. So got this gap in here. Notice how we didn't spend much time below equilibrium. We tagged equilibrium. That's equilibrium right there? Yeah. And now we're racing back. We're inverting fair value gaps again. So we got that fair value gap there. So yeah, now we're retracing. If it's going to go lower, this is great, because if we do end up seeing price reprice lower now, we have a new market maker sell model to get in line with. So if it breaks this low, we'll look for that to be accumulation turn distribution, and then we could look to see price go lower from that and frame something around that framework. Okay, but for now, as long as it stays above this, if we continue to reprice towards these levels that I talked about, we're pushing away from this bullish PD array. We have dollar going lower. Things are now supporting more so us seeing price try to reprice to the buy side, right? We still have correlation sloppiness, but all in all, we do see that the Nasdaq is the slow mover of the three. We do have bullish SMT. You see that? But we also have bearish SMT. So what do you do when there's two SMTs? You look at the dollar. If the dollar's going lower, it's going to be more trustworthy to try to frame out the potential buy side delivery. But yeah, it's highly risky. Look at the wick. Huge, nasty wick. So again, it's just something that I'm not willing to be too aggressive on. I want to see how this is respected. It's a lot of weight, if-then scenarios. All right, today's a little more weight than it has been, but that's okay. It's better to wait, allow your stuff to fall in line so you can take a good entry, versus taking an aggressive entry, you get stopped out, and then wish you would have followed the rules. Right, whatever those may be for you. Not taking a position is a position. It's called capital preservation. And if it's not crystal clear, super obvious, like that short was from earlier, it was very obvious this was going to try to reach lower. Wasn't sure if it was going to fill it in entirely, but it never slowed down, right? So a simple run from there to there, right, or from here to equilibrium, there's reasonable once it gave us that balanced price range in here. So that was blatantly obvious. Had a couple of red flags, but it was obvious that that's what it wanted to do. If it's not blatantly obvious that one side is more likely than the other, and you look to take a trade, what are you doing? You're gambling. You don't know what it's going to do, right? Especially if you don't have your process organized yet. Which by now you guys should have a pretty reasonable amount of things in order. You guys could let me know if you don't. Okay, so yeah, what I'm looking at, trying to pay attention to, is how is this going to be traded in here? So we got to make sure that if we're going to try to anticipate bullishness, what price needs to do for us to justify that is staying above that range, preferably above the midpoint. So we're already kind of breaching that. So I'm like a sniper, just aiming my weapon, waiting for things to unfold. If this retracement results in a displacement above that, you could look at that as a mitigation block. If we don't break this low, we have a low, high, failure swing, respect to this distribution or accumulation turn distribution. Displacement through that, we're also now contesting in that case the 4 hour. This is respecting the lower part of the fair value gap right there. I don't know, but that's so yeah, just a lot of waiting. So Okay, we're still below the regular trading hours gap midpoint. Go to the 5-minute. This simply looks like it's a retracement. If we do continue to drop in here, clearly looks like it wants to reach into that. Again, this is a 4-hour breaker, right? That's what this reaction was from. If it continues to drop, then this was all just simply a drop lower, opposing PD array, triggered a counter trend move. Then we set up another bearish breaker in here. Again, one of the main issues is we're at equilibrium. So that is potentially a problem. So it adds risk. But we'll see what happens here. Okay, so now we're getting below this. So we now have a low, high, lower low. Okay, so any return back up into this, we should be able to see dynamic resistance. We're respecting this upper level, so I mean, correlation is still nasty right here. S&P is nasty. I like this breaker in there. It's beautifully respecting. You could see that there's a inversion for a value gap in there as well. So yeah, that's a nice wick. So we got change in state of delivery right there. So we should see speed. Let's see if we could return into this. There's an inversion in here. So let's see how that is treated right there. You could literally wait for that response, let an order block form, or you can be aggressive in there. Okay, so yeah, now order block's not forming. That's a risk, right? If you wait for a little bit more certainty to unfold. So yeah, that right there has beautifully respected that low as assumed if it was to break through this. That's what we would anticipate and expect if it's going to look to target the lows down there. Again, we've gotten up here. The only way bullishness would have been likely is if this would have failed and broke this. In that case, I would have been able to buy up into these highs from the mitigation block. But now there's that short right there being offered from the market maker sell model idea unfolding in here. We got second stage distribution level right there. So we should see speed and distance pick up from this level if it's going to go lower. Then again, it could consolidate. There's that risk. So are you willing to accept that risk? You got to make that decision. I can't make that decision for you. Equilibrium at 27. And so just to define that equilibrium for you. From the high extreme to the low extreme, it's right there. Right in that area. Basically at 800, 29,800. So a little bit above. So that's where it's at. It doesn't matter how many days, it matters which range is the parent range. So if we go to the weekly chart, when you look at the parent range, what is that? What is the highest extreme and lowest extreme? All this price delivery is working inside this high to that low. That is the parent swing. You have this low and that high, there's an equilibrium there too. But that's not the parent equilibrium from the highest time frame. So this is a very important equilibrium price point, and you could see just how important that is. Back and forth, back and forth. Right? It's like a black hole. If price can't escape equilibrium, like we are not clearly trying to dynamically reprice out of it, it acts as a black hole and keeps price stuck until we get a serious move out. And many times that requires a news event. I thought CPI may be enough. And then if it wasn't, I thought PPI would be enough. But clearly, the war in Iran, all these geopolitical things taking place, you could see that it's having an effect on the cleanliness of the market. The real interest of price running aggressively. Take that off. So this is nasty. If any of you guys have struggled, right? If you've been on these live calls, you've been able to navigate all of this pretty solidly for the last 3 weeks. But if you've been doing things on your own, maybe it's your first time watching and you've been struggling, these are the conditions you want to make sure you are safely cutting risk in or not participating at all. Like if you're engaging and you're struggling in this and you're wondering why, like, oh, does this stuff work? You're being beat up by intentional manipulation in a consolidated, very nasty range. So if you're wild, you have no limits, right? You don't cut back on your risk and you're pushing like we're in a trending environment just because you see something like this take place. You know, you should expect that you're going to lose more than you want. You should only be taking 1 to 2 trades a day, if that, right? On your demo, right? I can't tell you to trade live. I can't give financial advice. But if that's what you're doing, you know, 1 to 2 trades a day. You should never blow your account in a day. You should never overtrade. When you see this, you cut your risk by half and you deal with it, right? And follow your rules and you should be fine, right? So yeah, you see that speed right there? It's second stage distribution, just like we said. This candle right there, second stage. So everything outlined, I told you guys when it comes back, if it fails to do this, it's going to set up a market maker sell model that we could participate in, targeting the lows down here. And pretty much that exact analysis worked out. So from the short over here to the idea of a short being presented from this lower area in here, targeting these lows, 2 trade setups, 3, 4, right? There's 3 inside here, 1 right here, 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 and then 1 inside of here, inside the market maker sell model, right? We have the breaker in there I talked about, okay? So there's more than enough opportunity that has been laid in front of you to participate in this. With me personally, I have been sitting on my hands, right? Because, you know, that's my prerogative. You know, I don't have to take a trade every single day. I'm not worried about it. But clearly you could see my focus is to get you to understand, not to take my trade setups. But I hope that I'm accomplishing the goal of getting you to understand why this is favoring going lower, what turns off the interest to want to go higher. And we'll see if that can give us another acceleration from there. This is a balanced price range. Again, market maker sell model, failed market maker buy model scenario. That's very telling. Once it breaks down like this, again, I highlighted this as a potential second stage. So we should be quick away from that. We're below the lower 25 to 50% of the regular trading hours gap. That's bearish, right? So let's see if this thing can't accelerate. See if it can't get one more little leg through these lows right here. We're hitting the first presented fair value gap from the other day, by the way. That's a first presented fair value gap from the other day. Right here. So yeah, nice. And that's enough for me. So that lower level in there, I told you guys, should be able to accelerate. Mind you, I let this trade go. All the trades that I highlighted in here. I told you guys when it was more likely to go short than it was to be bullish, which is what my initial objective was. I wanted to see if we could get it to target those equal highs. Dollar was bearish. I think it still is bearish. So there's a lot of stuff that's promoting price to continue to go higher. There was a risk of equilibrium. I stated how that's a risk. It may refuse to give us that follow through like it has because we're still not done with equilibrium. That may change really soon, right? If we break down below this candle here, I believe that'll be the case if it gets down there. I talked about, Emmanuel, shout out Emmanuel. He talked about this as a market maker sell model. He mentioned it before I got to it. That's a market maker sell model, right? This is a market maker buy model. It failed. And we broke through 50%, created a balanced price range, price went lower. We had regular trading hours, right? We talked about the midpoint, how we need to see how price respects that. If it respects it and then we blast through this, getting back above this fair value gap, getting back above the upper level, staying above the upper 50% of the regular trading hours, that would promote and support us looking to target up here. This green box, right? Any of these green boxes that you see right from the beginning, aside from some of the ones like that I put on later, the green and blue boxes that you see that are very faint colored, those are new week opening gaps. So anyone that's new or maybe has been here but just doesn't know what those have been, those are new week opening gaps. The red ones are new day opening gaps. They're used as anchor points. If I'm bullish, I want to see those things get respected in the upper portions. Right? If I'm bearish, I want to see them respected in the lower portions. Okay? But aside from that, right, that's where our smart money reversal formed for this little market maker sell model inside of, price looking to reprice here and go lower. We've now taken this out. What did I tell you guys about that? That should be accumulation to distribution now. So now that is a trigger for market maker sell model. We talked about this bullish breaker. We had a slight hard time breaking through it for a little while, but now we're closing below that full range. So what do I think? This is now a market maker sell model pretty heavily. This is now qualified with the respect. It qualified this is now a second stage if we can get down there. So we should be able to keep going. This liquidity here, I told you guys earlier, looked pretty nice. So it looks like we are going to have enough energy to get down there. And I definitely should have held this little move that I took right there. Just secured, how much did I secure? From that high in the fair value gap. 54 points. Okay. Okay. Amp live. Right when we hit that fair value gap, you see how I entered on that candle? Price went up into it. At that moment, I was literally saying it's probably going to hold that. We'll see if it can't hold that and then give us one more leg lower towards that liquidity pool that I talked about. Right there. Okay. Wasn't sure if it was going to give this accelerated move here, but hey, it's the way it is. Okay. But that's beautiful right there. It's 54 points, right? From entry 72, 51 points, right? Right down below this, which is a first presented fair value gap from the other day. So think about it. I talked about these trade setups. I didn't engage them. I told you from the very start, if a move takes place, because of what we teach here, because of what ICT teaches, when you have experience and you know what you're looking for, you don't need to be concerned about missing a move. You don't need to catch this short right away. You don't need to catch these buys. You don't need to catch these shorts. It just depends on which one you're comfortable with. If you need all of this stuff to allow yourself to be comfortable and you still have a target that's logical, like we had the liquidity down there, which I mentioned here, Okay. We talked about how this level here, when it gets traded through, which it did there, okay, that should result in price giving an acceleration. I talked about the run up here. If this was not to be respected and this breaks this low here, we could now think market maker sell model. That's something you could have engaged too. Okay. We got inversion fair value gap. We have, again, buy side, sell side delivery. That is a balanced price range. So price returns into that. This fair value gap should get left open. This is the logic I used to enter this setup here that I just showed you, which I literally talked about it as it was happening. Again, I'm not here to get you in trades. I'm here to get you to understand how to read price so you can do this on your own. So you have the choice to pick either I'm going to take these shorts or I'm not, and I don't care. Or I'm going to take these buys or I'm not, and I don't care. Maybe I'm going to take this short or I'm not, and I really don't care. Or maybe you look to take this one. And if you don't take that one, you, again, shouldn't really care because something will form later on. You just have to know how to navigate price. And that's my main goal. I could come out and make signal services and do all this crap and lead with, hey, I'm accurate. I call signals, come copy me, and grow my channel probably 10 times more and have way more people. But I don't want to do that because that doesn't help you. I'm literally giving signals in the moment. I talked about this before it happened. I literally just highlighted this one. I said, if this breaks down below this, it should be accumulation turn distribution, and it should print a market maker sell model. If this gets down below and then runs through this, that should set up a second stage, and we should fly through the lows and then eventually get down to here. I literally talked about this stuff if you go rewind the video. If you were paying attention, you know, you were able to catch all this stuff in the moment in terms of what we were looking at, right? So again, I say all that to say, what we teach here, you need to focus on the process, right? What are we sharing? How can this get you to be able to make a decision? And which areas do you see me talk about that you resonate the most with? Where is your model? What is your model, right? What execution are you looking to trade? Breakers? Do you like market maker models? You can trade market maker models with one PD array, right? If you frame the market maker model and you see the second stage distribution and you like fair value gaps, okay, let a fair value gap form around that specific phase of the market maker model. And then you can engage. This in itself is a PD array. For those that don't know, I've never talked about this before. I've kind of taught you enough for you to make this conclusion. But this is a PD array. The accumulation turn distribution is what? An inverted balanced price range. So isn't there an argument for when you see this on the left side, when it breaks through it and returns back into it? Isn't there an argument to simply enter off of that itself without any other PD array required? Yeah. Okay. It's just another reason that market maker models are my favorite. And it's just another reason why, again, I make this bold statement. I can find something and do find something live every day. Okay. Does it mean I engage everything? No. You saw me hesitate to enter this. You saw me in my mind, right? You heard my thought process of why I didn't want to enter this. The correlation crack was too much. There was too many other things going against this. Dollar was declining. This was declining. I don't like to engage when that stuff's out of line. Even though I was correct, right? I was correct here. I was correct here. Okay? We talked about this as a bearish breaker. That retracement in itself, you know I was looking at this. I wanted to confirm and see if this was going to be respected. This move in here is anchored not only to this breaker, but it's also anchored to this larger breaker as well. This buy side to sell side delivery, again, that's a market maker sell model. That's a balanced price range. So what do you want to see? Lower 25 to 50% being respected. Did it do that when it created this breaker? Yeah. Are we below the regular trading hours gap, 50%? Did we stay there and refuse to get up? Well, we were waiting for this in here to tell us whether that was the case or not. Did it refuse to go higher? Yeah. Did it stay below a level that makes sense for this to run lower further? Yeah. So does that qualify this move and this move as a move that could be considered if you understand all these things? Sure. I think absolutely. That's why I took this execution. Now, there's an argument. Should I have held this? Right? Sure. Did I hit my goals though? Yeah. So am I dissatisfied that I didn't hold it? No. I could care less. Just like you'll eventually be able to say. Because you'll see this stuff happening over and over, and you'll trust yourself. So I hope that you guys pay attention to these key elements and aren't just here looking for, hey, when's he going to send a trade setup? Because I'm giving those, obviously, if you're paying attention. Okay? But I make you work for it because that's the only way that you're going to actually know how to do this on your own. So yeah. Let me see. I did the same thing. How did I mess up? I'm in at 8:11. Whoo! I sure hope that you took most of your profit off. Leave one runner. See if you can't get it to come and target this, Sean. That's what I'd be looking at. I'm very curious to see how this candle closes. If it can't close outside of this, this is still potentially a breaker. And because equilibrium is still there, we still haven't done enough to disqualify this equilibrium as something that price won't come back to. That's a large price swing. That's a deep retracement. Very powerful respect to this level in here. Oh, nice. You took it from up here, huh? Way up here. You took it from London, huh? Dang, Jen, you were trading in London? Holy crap. You're still awake? Some 46. That's from right up there. Yeah, that's spectacular. Look at that. Beautiful area to enter. Nice little baby stop run right there. Inversion fair value gap. Bang. Nice. Oh, you had a limit? Oh, interesting. Interesting. I'm all the way out. Was able to grab 116. Beautiful. Beautiful, 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 Sean. Took partials around 60. Hey, that's still 116 points. And that's what you should do. You should be taking partials. That's a good habit to build. Like, there's an argument. I could have taken partials in here, held it all the way. But I like my, 40 to 60 points. I'm satisfied. That makes enough for me to compound. Again, I've been very transparent with you guys. That's something that obviously I am trying to break myself out of, is being so satisfied with 40 to 60 points. It was 30 to 40 points, right? It was 20 to 30 for years, up until what, a year and a half, 2 years ago. And then I started actively working to increase. I haven't had a 30-point trade the whole year, basically. So we're making progress. I mean, that's the thing. It's a habitual thing that I'm trying to break through. I trust my setups. I come out and call them in front of you, right? You guys see them run hundreds of handles because our framework is unrivaled. We're framing things from a higher time frame perspective. Like, this is a 2-hour chart that I was talking about the market maker sell model on, and it's being respected. So what does that translate to on the 32nd? Big price swings. Okay, it's big. This is big, large runs. See, it ran up, respected it, and we're breaking down aggressively. We also talked about this inversion as a qualifier for price to want to break down and go lower. And that was beautiful. That's a beautiful qualifier. Price rallied up. This high was just simply to get into that inversion fair value gap. That framework, look at the framework that's led to. Right? And again, like I said, Sean, if you were still holding the trade, I'd be looking there. But again, I'm transparent, right? I'm not perfect. I got things I'm working on just like you do. I know a lot of things that are super powerful that can help get you clarity. And of course, you walk your rest of the way. But I'll never claim to be the best. Probably will never be the best. There's always going to be someone that's better. But I do know stuff that works. And I do know a lot of things that can get you to get into those early stages of profitability and then learn to thrive and catch your strides. And there's a lot of students that I teach that hold trade setups much longer than I do, right? We do the same framework. We have the same perspective. We have differences obviously here and there, but everyone has their own limits that they're satisfied with. And I'm satisfied with getting 40 to 60 points a day. That pays all my bills. That puts me in position to thrive how I want to thrive. But of course, after you call moves that run hundreds of handles, in some cases, thousands of points, you kind of get stung after a little while thinking like, man, that's a lot of money that's being left on the table. That is a lot of money being left. It can have like quadruple the amount. But what gets you to being profitable, some of the rules that you have, once you notice you're growing out of them, which again, me being satisfied with, 20 to 30 and then, 40 to 60, eventually you grow out of those things and you see this stuff happening over and over and your skill set just evolves to a point where you're like, well, maybe it's time to start adjusting things, but you always want to slowly adjust. What gets you to be profitable, once you feel you're growing out of the rules, to make sure that you don't destroy what it is that you've built, you got to slowly make adjustments. You got to carefully adjust the mechanism so you don't ruin it. And some people won't be able to hold trades long enough or longer than the 20 to 30 or 30 to 60 or whatever that limit is that you see allows you to reach profitability. Some people won't be able to grow out of it because it's, too nerve-wracking. They may be the most confident trader on the planet, but they can't grow out of that. And is that something to attack yourself over? No. Most people can't even make 5 points in a year positively, right? Most people are making negative numbers. So for you to come out and be like, yeah, I can tag 20 to 30 points every week, a couple times a week and come out profitable, you're in like the top 5% of traders. If you can make 20% in a year, you're in the same league as Warren Buffett. Think about it like that. He only makes 18 to 22% a year for the last 70 years or whatever. So just think about that. Next time you think you got to make 100% in a day, you're brand new and you're expecting 100% a day. Warren Buffett, one of the greatest investors on the planet, built a career off making 18 to 22% a year. Right? So you don't need a lot. You need to be consistent. You need to manage risk. When you make money, you need to be able to keep that money. And when you lose, you need to have protocols to manage the losses. You can't be giving it back. You'll give some of it back. It's part of the game. But how you manage those moments, that's what's going to decide whether you're profitable or not, whether you can even be profitable or not. So, yeah, I'd be lying if I said that, holding this wouldn't have been a good idea. That was a beautiful idea. And Sean, it hit the target, told you to watch. So we did end up having enough energy to get down there. All of this is anchored from that inversion fair value gap, the failure to deliver up there and hold that level. And we went up for this 4 o'clock candle, or a 4-hour candle. So we basically had, let me take some of the drawings off. So we got the open price here. We have accumulation, manipulation, all above the open price at 7 a.m. And we got distribution, rebalance. So we had accumulation, manipulation, distribution, rebalance, redelivery. You can kind of see a sloppy version of that in here, right? Accumulation, manipulation, distribution, rebalance, redelivery. We have accumulation in here, manipulation above that high, distribution. We'll see if this can rebalance and then redeliver again. I don't think so, though, because we just probed this sell side. That's significant. So we may pull back a little bit into this range. This is what you like to see away from equilibrium. I mentioned this the other day, but I'm going to mention it again. Whenever there's a higher time frame consolidation or any consolidation, when price decides to leave that consolidation, the anchor or start of the move that leaves that consolidation is going to almost every time be traced back to that equilibrium price point. The start of the move that gets you out of that consolidation away from equilibrium is going to be from that equilibrium. It may take forever for it to get to that point where it finally has a run away from it. But every time the price leg that's going to get you out of that consolidation is going to be able to be traced back to its origin at that equilibrium price point in the consolidation. Does that make sense? Throw a 1 in the chat if that makes sense. I appreciate you saying that, Mike. I mean, again, every live call that we do, I mean, it's just got so much value. Today has a lot of value too, because you guys got to see my mindset shift from, okay, I have one perspective. That perspective was proven that it doesn't want to be respected. So my mindset adjustment was put on display. Some of my uncertainties were put on display, because I'm transparent. I let you guys know these things. When I decided that price is likely to continue to drop, right? Instead of having the initial objective, which was going higher. What caused me to adjust my thinking? I outlined that as well. When price was over here, created a balanced price range, market maker sell model, second stage distribution, return to the fair value gap, respected it, breakdown, one more return into that. Talked about that as a potential idea too, if it's going to go short, targeting liquidity. Price rallied up. I talked about, okay, well, we're at equilibrium now. We got to see how this is going to be respected. If it respects it and breaks, this will be a mitigation block that we could then use to target buy side. And then this will be a market maker buy model. If it fails, it's a failed buy model and it'll create a sell model. And then we should be off to the races, right? This also was the open of the 4-hour candle at 7 a.m. So that's bearish power 3 for the 4-hour candle right here. This rallied up into this breaker, also previous market maker sell model that was completed. So that's a balanced price range. It's a breaker. It's also a 4-hour inversion fair value gap that price closed below on the previous 4-hour candle. So it rallied up. If we stay below, we may look to continue to go lower. Right? I said if it gets above that, that would be enough for us to then think it's going to go higher. It stayed below it. Then we closed also below this, or we rapidly looked to trade below this as well. Once it did that, that's when I felt comfortable to take the short. And I took the short down there, which I showed you guys. But all through this, I talked about this as a possibility, these as a possibility. There's multiple, one there, and then that last wick. And I told you why. So we talked about so many things today. And it's so powerful, all these things. And those of you that stuck with me, I appreciate it. I hope you guys got a tremendous amount of value. There was a lot of things to learn from this. So it's definitely worth a rewatch if you guys get the chance to rewatch it. But I think that we've done enough. Okay. If you guys got any questions, just let me know. We will be live again tomorrow, continuing with this marathon I do once a month. And yeah, just let me know if you guys need any help with anything. If you guys want me to talk about anything in particular, We'll hop on earlier tomorrow if I get enough questions, and spend the first like 30 minutes to an hour just answering questions. But yeah, hopefully you guys got value. I think I'm going to leave it there. Spectacular delivery today. A little bit hectic. Very, very good learning experience. And just hopefully really drove home the point that you shouldn't be worried about missing a move. Because if you worry about missing a move, you won't be able to catch things like this. You won't be able to have confidence moving forward to maybe catch any other continuation. This right here, this high, low, high breakdown, that's a mitigation block. Okay. That's a little baby market maker sell model. Accumulation, take the high to that low, drag it over. If it's bearish, it's going to respect that. Did it respect that range? Yep. Look at that right there. Stop run. Respect to that accumulation. Turn distribution. Breakdown below that low. It's a shift. 2022 model in that little fair value gap on the 15-second chart. Continuation. Failure swing. That's low resistance. So how did price deliver? Quickly. No issue. So, but you can't see these things later on if you get concerned. So I hope that today really drove home the point in that regard, okay? So again, thank you guys for hopping on. Yeah, no worries, Mike. No worries. But yeah, with that being said, God bless you guys. Hopefully you learned some stuff. Let me know if you need anything. Don't forget to like the video, subscribe to the channel if you haven't already, and share the channel with anyone you know who could benefit from these types of calls, or maybe even add value to the community, right? Maybe they're fun or, you know, very knowledgeable. You know, I'm always open to anyone that comes, any skill level. I think it just makes the community better. You know, we're just going to keep continuing to thrive. And again, if you guys have any questions, let me know. I'll be happy to help you. But with that being said, I will talk to you guys tomorrow on the next call. We will be live same time at 5 o'clock. Well, we were live at 5:20 today. So if I get enough questions, maybe I'll switch the time to 5 or maybe even 4:30 a.m. If I get a lot of questions, probably get on at 4:30, so we have enough time to answer questions, okay? So yeah, that being said, I will catch you beautiful people tomorrow. Have a good rest of your day, okay?